Stock market today. Analysis for December 15th, 2022. I'm going to do my best to provide you and myself the most value with the shortest amount of time. Not making it overly short, but trying to make it overly power-packed with value. So we're going to we'll take a very quick look at these major markets in the different U.S. financial markets, and then we will take a more detailed look at the 4 major stock market indices, and then we'll break it down into looking at the 11 different sectors of the stock market. If you're relatively new to trading, just kind of sit back and watch it, learn whatever you can learn. But I'll tell you what, if you want to have a trading style that makes it almost like none of this stuff matters, I mean, it does matter, but you won't have to pay attention the same way as if you're trading directionally, then when this video is done, go back and watch this link right here that popped up at 1 minute and 15 seconds. It's going to be to a playlist that shows you how to basically how to do something called the wheel strategy, which is a combination of selling options, and if you do it fairly well, then it makes it difficult, not impossible, but it makes it more difficult to lose money. Well, what's the trade-off? When it comes to speculating or investing, if it's difficult to lose money, there's probably a trade-off, right? So what's the catch? The catch is you won't make as much money when you're doing the strategy than if you can accurately predict direction and ride out direction. Now, that's accurately predicting direction and riding out direction, whatever type of directional trade you're doing, that tends to be a lot more lucrative, but it takes a lot higher skill level and ability to manage that. So if you want something that doesn't take as much skill, which you can over time build to this, but you just want to start with something that's a good entry-level strategy. There are multiple components too, so it will require you to become smarter. However, it's going to make it difficult to lose money. Then look at that strategy, and consider clicking the link in the description below here and getting some products over at the website ihavsuccess.com to give you a better idea of how to select stocks. Without further ado, ladies and gentlemen, let's take a quick look at the overall U.S. markets, at least U.S. priced in U.S. dollar, and then we'll take a look at those indices, and then look at the 11 different sectors in the market. When we see overall that the U.S. dollar is trying to make a comeback in value, came up here on the 3rd day of being below that 200-day moving average, came up here, touched that 200-day moving average, poked above it, but pulled back. By the way, this is 1 month of data right here, so we're looking at a short-term time frame. But this 200-day moving average, which is in trading days, 20 days per month, is about 10 months of data, and we see over the last roughly about 10 months of trading days, 200 days of trading. Overall, the trend has been up, and in the last month, roughly, it has gone down, trying to rally back up. We'll see how that happens tomorrow. This is a TLT, which is like an equity representation of 20-year bonds. And we see the last month, 20-year bonds have been moving up, with the last about week of trading moving sideways here as it gets closer to this down-sloping 200-day moving average. Gold has really just been going sideways through this the 200-day moving average here. And as long as if it basically keeps this right around this 1780 range, it's probably gonna keep going back and forth here. We see a slight downslope with that 200-day moving average. Oil 200-day moving average was sideways, kind of slowly sloping down now, and we see a high, lower high here, rallied up to about I don't know, a little over 75, and kind of coming back down. Bitcoin, you see that 200-day moving average, somewhat steep of a of a decline, and this is the futures price of Bitcoin, by the way. And it just kind of moving sideways in this range from about right now about 16,000 to about 18,000. And if you look at a bigger picture of Bitcoin, it tends to do this and then it falls down. So we'll see what it's going to do over there. The VIX, VIX has been acting a little differently. Generally, the VIX is known as a volatility, and it is a volatility index. It's kind of known as a fear index, the fear meter. And there was a saying that when I first learned about the VIX back in I think it was 2012 when I learned the saying, at least, when the VIX is high you buy, when the VIX is low you go. But you know, on this 1 month chart, is the VIX high or low in relationship to what? You might want to look at like a year and figure it out from there. But if it was easy to pop it open and look at a bigger time frame, I would do that, but it would kind of disrupt my settings here, so I'm sticking with this. And right now, in generally speaking, over the last year, the VIX is low in comparison to where it's been previously over the last year. And we see, look at this, we see stocks, SPX drop today, Dow Jones drop today, NASDAQ drop today, Russell 2000 dropped today. Let's look at a little more detail of those. Take a look at that. SPX. This is an hourly chart for the last 5 days. So this is today per hour. So we see the first hour really sold off very hard. And believe it or not, on these indexes, volume doesn't pull up. So I might swap this out for like a ETF or something where we can see some volume, but right now I'm just testing out looking at the indices. But so sold off, we see a lot of price consolidation on the hourly through here, and open up today here, sold off, and then starts slowing some momentum right in here. This is a daily chart, and we see basically this right here here's the inner workings of that per each hour. So we see on the daily, it kind of double topped over this 200-day moving average. So right now, it's not looking too inspiring to see a Santa Claus rally at the moment, because this is the opposite movement of a Santa Claus rally. And look at this, breaking this 3950 was a lot of kind of support in here, although it broke 3950 in here, but that was you know, broke gap down and then rallied up. So we'll see how tomorrow goes, but this is probably going to start acting as resistance now. And on the weekly chart, and this right here is if you notice, it's really close in price. 40.29, 40.17. This is a 40-day average, 40 period average on a weekly chart. So it's meant to mimic this 200-day moving average. Not exactly, you know, pinpointed, but pretty close. And we see right here, right, rallied up right here, and we see this is 1 year. I'm not sure if this is when it first broke through the 200, but we see that basically for the last year it is just failing to stay above that 200-day moving average, which is looking like we're going to see more weakness. On the Dow Jones, real similar picture when we look inside that candle today, right? But the difference on that 200-day on the daily is that we had this W formation here, double bottom, rallied up through this, failed when it first went through this 200-day moving average, and then pivoted right here, bottomed out, and went up. So now, are we getting, like, see this double bottom? We potentially got a double top there instead of a W formation. Do we have an M? We will see, but this is going to act as wherever your 200-day is. There's generally just a lot of support or resistance on whatever side. So on this side, a lot of support. On this side, a lot of resistance. So it takes a lot of energy to get through it either way. And on the weekly, we see, look at this. Now, we're in Thursday, obviously, so it's got one more day, but it's almost a complete candle. We see prices traded all the way up here, trying to get above. Buying pressure pushed this all the way up here, but selling's not having it. Now, opened here, and right now it's, no, sorry, opened here, which is pretty parallel to where it closed last week, right? 2 red candles in a row. And I don't know, maybe it's gonna be breaking down below that 200-day moving average. NASDAQ, technology, looking sort of the same when we open up the candle. Maybe not as big of a drop off, and looks like maybe more of a gap down. And we see that the technology stocks, look at that, almost at this 12,000 line right there. It's just like, you know, I get it, they're a little bit above, but you know, it's like there's this range right here when it's gotten in here once, twice, 3, now potentially 4 times. But it really tried to go up here. I think this is when something about I don't know, Jerome Powell saying this, that, or the other thing, and the market went euphoric for a moment, and then I guess came to its senses. But same thing, we see this. We see a lot of price consolidation here, kind of right around this 1160, and then sort of on the down over here we see was pushing, you know, against it. So it's like this area is holds a lot of support and resistance depending on which side it's on. We're looking at that for last year, looking at a weekly chart, you know, we see same thing. It gets close to this 200-day, but just can't muster the strength to break through or really, you know, get over it. So looking weak. We got 1, 2, 3, 4, 5 of these candles down here. Just recently, I'm getting into counting daily candles, because maybe around somewhere between 8 to 10 days, a lot of times there potentially could be like a pivot. For example, we had a pivot here. We could say this is 1, 2, 3, 4, 5, 6, 7, 8, 9, somewhere in there. I don't know, like it was dropping. Here's 1, 2, 3, 4, 5, 6, 7. On the 8th day, it was dropping down. 8th day, rally back up. How about this one? So 1, 2, 3, 4, 5, 6, 7. 8th day, rally back up, and then 7, 8, 9, 10, and then it really pivoted, right? So there might be something to it. Why don't you guys practice that on your own, and I'll keep practicing it. We'll see what we can come up with, and then we'll look at that Russell 2000. All right, taking the cover off that daily candle today. You know, looking the same. I get it, traded a little bit lower, but didn't pull back too much in that resistance. And oh, it's really been getting clustering right around that 200-day moving average, but it seems to be failing that. And we just see a lot of price consolidation in here, right? Just a lot of people, like a lot of volatility right in this area, buying and selling, buying and selling. And with that 200-day moving average sloping down, you can really see that strong slope down on that weekly. So looking more of the same. You know, we see a W, but it's boom, it's not fulfilling that. Go up here, but double bottom right here. Maybe it's just going to be making an M. We'll see. It's not looking too strong. I'll tell you what, my friends. It seems like the stock market is, if it's going to rally up, it's got a weak rally, and I don't mean 2 weeks in a row. I mean the opposite of strong. So let's take a quick look. It is not 9 sectors. I got to change that. It is 11. Technology sector, boom, we see it fell off. The healthcare sector, which let's say it seems to be violating that uptrend. Now we're only looking at a month of data here, right? So if we look at a bigger, a longer time frame, not a higher time frame, not a weekly chart, or looking at the daily chart, if we looked at maybe 6 months of data, maybe we'd be able to tell it's still an uptrend. But just by looking at this, it's getting close to violating that. Right now, at the minimum, it seems like it's moving sideways, which is, I have been talking about a lot of these. Like, look at this. That kind of looks sideways, right? I know it dropped down right here, but opened here, and it just kind of up down, but you see kind of just going sideways. Whereas this, at least we see really going up for a little while, now kind of moving sideways. And that's healthcare. And note those 200-day moving average. Note this 200-day moving average, which FLX just dropped, which is the financials. Did I say FLX? XLF just dropped below that 200-day moving average. And so, you know, just overall, you take a quick look. You see any green? You see any green? You see any, whoop, there's green. You see any green? You see any green? There's green. So 2 out of 11 had up days, but look at they dropped down. Those are weak candles. Like, yeah. So anything really standing out? Drop down. This more sideways moving in industrials, and like you see, 200-day moving average. We're looking sideways. Really dropped down here on the basic materials, and energy continued to kind of have this downward slope. But you see that 200-day moving average. So maybe if we looked at a bigger, longer time frame, maybe we would see its uptrend. But the last month it has been pretty much nothing but going down, sort of going sideways at this last amount right here. Sideways to down for consumer discretionary with a big downtrend. Totally sideways long-term trend for consumer staples with rallied up and then went sideways and dropped down. Now, this, I've been watching the healthcare to see if it was going to start looking like this, and it is looking more like this. If this candle was like more in a line here, but we really want to see this pivot point right here, right? See it was dropping down right here. Here was the low of that. Start going up. If it keeps kind of, if it either takes that out or if it just kind of keeps lingering around here, then this, obviously this uptrend is over. And right now I'm thinking that sideways trend. But as far as I think we're in a little sideways trend. But as far as a big one, we see this next one taken out right here. So if it starts going in here, at the minimum, we're definitely done with the uptrend, and we're either in a sideways or down. Utilities overall, you know, it's up here. It's like I guess there's a case to be made for a trend line up in a month, mainly a sideways 200-day moving average. But we see the last half of the month, it's kind of been going sideways, right? Rallied up here, and just kind of went sideways here, rallied up a little bit, but it's back right down to there. Real estate got this downward slope, and looks like a sideways trend to me, with these little up and down inside of that sideways trend. And retails started off up here, started the month. It's not literally the month. It's you know, it's 30 days of data. There's always going to be like whatever 1 month, whatever this chart considers 1 month. Don't necessarily think it's like, hey, 1 month. It's you know, it's December 12th, December 15th. It should only be half a month. It's going to be just going to keep going back. It's always going to show us quote unquote 1 month, not a calendar month, just a month of trading. So the next candle, we'll kick this candle out. I'm assuming. I'll double check tomorrow. But we see that it, you know, gap down here, rallied up, and then had this nice trend down, and is continuing that trend down. So, hey, my friends, and to me, the stock market looking weak, in my opinion. Looking pretty darn weak. Bring back this oldie but goodie, right? We used to look at this on the Yahoo Finance. Converted it over here just to try to keep everything on one platform to make everything go a little faster, try to give you some more value. But we see this down, right? This is basically the beginning of the year right here, right? So you can kind of, you know, you can debate with your friends and family over Christmas and the New Year if did the downtrend start in December or did it start in January. Go ahead and let me know what the results are when you debate it with your family. But and then when you tell me what it is, I'll go with whatever you say. I know it started somewhere in that time. We see the high was really right here. Was that like 1 day? Was that the last trading day of December? I don't know, and it kind of doesn't matter because basically this downtrend started around the beginning of this year, end of last year, beginning of this year, whatever. I'm not going to split hairs over it. And we see that this has basically been the top part, right, from the beginning of here right? And there's a couple times where it kind of tested that top part of the channel. And right now we tested it, we broke out of it, and now we're coming down, apparently coming down to test this to see if it's going to, is this going to act as support or support for it, or is it going to break through? I don't know. Let's throw on something like this for a second. Now that's where it's at right now. So see right in here, I think one scenario that I think is likely. Let's go in reverse. I think the most unlikely thing to happen is that it's all of a sudden going to start doing this. Maybe next year, if the government, the Federal Reserve, whatever, you know, these quasi federal government agencies or whatever they are, if they come out with some program that whatever name they call it, if it mimics the result of this, then we'll see that. But if that doesn't happen, then I think the least likely scenario is a strong bull trend starting. What I think could happen though is a sideways trend, that it starts hitting this support, this resistance here, or support, sorry, here, maybe here, but definitely this is like kind of the first area of support. And you look it out, if we carry it out here, right, it's kind of in that area. Right? And it's not a specific number, right, to a penny. It's more of kind of a range, and we're kind of right in that range. So let's see what's going to happen. If it starts, if this doesn't catch support with it, and let's look over this way too. We see that prices, they kind of got sticky through here, and kind of in here, and then again, you know, down to there. So we'll see right in here. So if it breaks through that though, and it breaks through like this area right here, and then it comes down here and starts testing this you know, low 360s, high 350s, then we got to see if it's going to like bounce up, or is it just going to stay in here? I mean, if it comes all the way down to here, then we're back in the middle of this channel, then it's got to get out. But so I guess the first thing we got to really do is see if it's going to fall back into this channel. Is it gonna fall back in there, or is it gonna catch support and kind of grind sideways? So grind sideways, continue the bear market. I could see either one of those being more likely than some sort of strong bull trend like this, unless the government gooses the stock market a little bit or a lot. So what one thing you can potentially do besides checking out this, it's that risk indicator going down even a little more, risk coming off. Is that because the prices are more back into proper evaluations? Like, but we're still, just take note, we're still in the high risk, but we're just not in the like close to 300. We're not pushing the extreme risk. We're just in the kind of bottom of the, you know, we're in the top. What do you want to say? The bottom 75%, or the I guess bottom 25% of the high risk zone. Regardless, get your paper trading on and learn some things. Go to ivesuccess.com, download some stuff. I'm working on some stuff for you. So watch that playlist that I talked about. And that's all for now. I have no idea how many minutes this was, but I'm gonna get this posted, and then tomorrow we'll wrap up the week. On Sunday, should be on Sunday, posting the weekly chart review. We'll take a deeper look at those at the weekly charts, and we'll try to forecast what's going to happen next week and going into the future. You guys have a fantastic day. Bye bye.